Welcome back, everyone, all of our dear attendees. It's time to deep dive into our next panel discussion. Now, we do realize that on one side, there are services that the traditional banks offer. And then on the other side, there are customers who have expectations in the digital age. From what we see, it's the neobanks that are actually bridging that gap. And it's time to find out how neobanks are also disrupting the financial services industry. And let's find that out from our eminent speakers who are joining us this evening. We have with us Amol Sonbarse, co-founder InstantPay, Sumit Gwalani, co-founder Fee, Vineet Tyagi, Global Chief Technology Officer, Biz2X, Swapnil Bhaskar, Business Head, NiYO, Prashant Singhal, Chief Technology Officer, Jupiter. And to spearhead this fabulous panel discussion, we have with us none other than Sanjay Doshi, Partner and Head, Financial Services Advisory, KPMG. So it's time to bring on board all of our speakers here, and let me quickly hand over the proceedings to Sanjay. Over to you, sir.
Thank you, Kavya, and very good afternoon to everyone and the esteemed panel members over here. I think neobanks, and Kavya put it rightly, right? It's acting as an important bridge between the customer and the kind of experience they would like to have with especially the new age customers we have. And on the other side, you have banks and the large banks, which have a tech stack, but it's a traditional tech stack. They're trying to upgrade it, but the flexibility and the agileness, which probably what neobanks can really bring in, is a great value add. Now, to have more deeper conversations and detailed conversations, the esteemed panel is over here, and I would like to start with opening comments from each of the panel members. So I'll start with Sumit. Sumit, a question to you over here as an opening comment. Neobanks, right? What is your thinking about the positioning today of neobanks? What is the growth potential, opportunity landscape over here?
Cool. I think before we talk about neobanks, we should take a look at banking over the last 30 years. Banking has gone through an evolution in the last 30 years. You talk about the early 90s and you had the emergence of HDFC, ICICI, Axis. And what they brought was better tech, friendlier branches, and consumer service. Then another 10 years later, you had the Kotaks and others providing higher interest rates. And then again, like 7 years back, you have seen another segment getting addressed by microfinance-based inclusion with the advent of small finance banks and payment banks. As India has evolved, and over the last 4-5 years, we've seen the growth of UPI. And what COVID has sort of taught us is that India is ready to go into a banking mode, which is highly hyper segmented. And we have realized that branch banking is no longer required, which basically means that the next generation or 10 years of banking is going to be with highly specialized segments. Could be retail banking, could be SME banking, where we are using cutting edge technology to go deeper and solve problems beyond the core financial transactions. So that's where neobanks come into play and will play a huge role, according to me, over the next few years. And there is huge opportunity of growth, right? If you look at the top 2-3 private banks in India, excluding SBI, and they still have a very small percentage of the Indian market, close to like less than 10%. If you take the top 3-4 private banks, which means, and these banks are growing at a CAGR of 20% year on year, which basically means there's a huge opportunity for everybody to grow in this market. And the way I see it is neobanks can solve new problems that the user faces today and give them value and provide impact.
Well, yeah, great thoughts. Moving on, Swapnil, what are your thoughts over here, especially the diversity also which a neobank brings in, right, on the investment side?
Yeah, thanks, Sanjay, for the question, the starting thing. Just to, before we get into the details here, the only thing, when we say about new age customers, what I was thinking, the customer's demand was always the same across the history or maybe in the future. They want the faster services, maybe it's cheaper or more convenient way of doing the banking. Is this the technology which has, evolved over the time? And that's where we are positioning, ourselves as neobank, and new age customers are actually becoming more intolerant to how actually banking has, performed in the past. So that's where, the whole neo-banking positioning is going to get into. Now, coming to, as Sumit also said, it's, how do we customize based on the user needs and all those things. One of the aspects of Neobank is to provide really good value-added services, and investment is certainly one of the key elements there. And if you look at the key differentiator as such for any neobank is going to be how good in terms of value addition they do to their customers, and basically is there any cost leadership and all those things in comparison to the rest of the banking industry. And from a customer's perspective, anyone wants a customized financial services. It can start from say micro investing to micro lending and all those places. So I mean that's how I see, and as we all know, there's a huge opportunity out there for everyone to grow there, depending on how we slice and dice different segments in India to cater to their unique needs, financial needs, and how do we meet that. So that's my thoughts, initial thoughts, certainly, and we'll be discussing more as we move forward.
Thanks, Swapnil. And Prashant, if I bring in you here, especially from the payment side, right? I think InstaPay and a lot about payments, especially post demonetization, and now neobanks and the entire digitalization taking over.
Thank you, Sanjay. I think further to what Sumit and Swapnil mentioned, digital banks have a few inherent advantages, if I may say. First of all is experience. I think multiple fintech pillars such as banking, lending, investments, etc., have had very disjointed experience in the recent times. There is a movement globally towards rebundling. Customers expect one place to take care of all their requirements, a seamless, simplified, integrated reporting. They expect the bank to be where they are. They don't expect to go to the bank. They expect the bank to come to us or to be in their pocket, for instance, all the time. I think neobanks have the advantage of building from the grounds up to be available 24/7, near real-time information dissemination, etc. I think that is the first tenet which we personally follow. The other thing which I've realized is that I think what we call hyper-personalization. Sumit did touch upon it briefly when he mentioned segments, but most of the current banking offerings are fairly commoditized. I think there is very little which differentiates one from the other. The next level of product innovation will happen through hyper-personalization, the right product for an individual customer, given his or her financial health, life stage, future requirements, etc. I mean, customers shouldn't have to wait through hundreds of products to figure out what is right for them. And I think through a suitable combination of data and science, we can eventually offer extremely customized product offerings to each of our customers. And I think if you see in other domains, this is where the whole industry is moving. If I see e-commerce, if I see social media, everything is hyper-personalized. And I think banking is unfortunately not there, but we'll need to usher it that in for the next 5 to 10 years.
No, absolutely. I think customer experience is at the center, and customer centricity really drives everything over here. Amol, what are your perspective here?
Yeah, thanks. So what we have seen in the last couple of years is, I mean, there has been a disruption which has happened in the financial sector. So more and more people have moved towards making digital payments than we've seen in the past. And now people are sort of moving away from your typical banking systems and cash payments. And and to add to it, traditional banks have not shown that willingness to change or to adapt to these changes, what these new age digital banks provide. So this growth shows that neobanks have a massive potential user base which could be utilized, and they have a great role to play in the future. Yeah, those are my initial thoughts. Yeah.
Thanks, Amol. When it's coming to you, a software as a service platform, right, and neobanks, how do you really relate both of them?
Yeah, I mean, great thoughts from everyone. Pretty much covers the whole, positioning and aspects. What I would like to bring on and add to that is that specifically in the Indian context, see, look, I mean, customers and banking systems and the customer experience, that's fundamental to this change that is happening. But there is other fundamental changes which India is sitting on today. I was just reading up and I was myself surprised that, the census data shows that almost 82%, 81.4% of our population is below 44 years, and out of which 53.8% is below 24 years, right? That's almost 60 crore or, 600 million, people who are there as potential to new age thinking. What also is happening is, the mobile penetration and the ease of use of this device that's created is phenomenal. I mean, the mobile penetration is phenomenal. The mobile usage is phenomenal by this particular segment. So there is a lot of innovation and a capacity to innovate to target this segment. Hyper personalization and going to the segment of one is obviously there, but even at a macro level, products which are more agile and can solve real, problems for, let's say, even a smaller segment of people, a student segment of people or a particular regional locality. Those kind of products cannot be brought on and mobilized in the existing branch-based banking system because the unit economics don't work out, the agility is lacking, and so on and so forth. While with neobanks, these kind of products do make sense. The unit economics work out. Tech, once you build a great platform, and the right platform enables and brings agility to your business model, you can do things and roll out products in days and weeks. Traditional product rollouts have been taking, with traditional or even evolved technology, has been taking banks months and years to roll out. So I think where we are, and from my perspective, adding to the great thoughts that everybody shared, is that there is going to be a lot of innovation and need-based use cases that are going to be there, and neobanks have a lot of tremendous room to grow and innovate in India today.
All great points, everyone. I think if you talk about hyper personalization or hyper segmentation, the tech stack, customer experience, you're talking about innovation, etc. But coming back to you, Swapnil, see, there are various models, right? And every neobank is really defining its own way of understanding the customer needs. And probably even where Sumit highlighted it, right? There are different segments to it, whether you're really trying to service an MSME segment or you're trying to service an individual segment. So, yes, there are different models out there. Uh, there is a defined customer segment, which a neobank is also targeting, but banks have also targeted them in the past. How do you see this being really different, number one? And number two, do you believe that this market is getting overcrowded? Means every probably technology company which is trying to provide service, is there neobank as a word being used probably a bit loosely?
Yeah, great question, Sanjay. So, I mean, if we look at neobank, basically, it's, right now, whatever the current status of neobanks are, you can, broadly, get into the, or divide them into, say, what a target group they are, going after. Say, business model can vary across B2C, B2B, B2B2C, different pricing models in place, cost structures in there. A lot of things can happen, but at a broad level, say, if someone is targeting MSME, which is the business segment, they are going after very niche use cases which have evolved, but the traditional banks couldn't look into it because there is a technology factor, there is a legacy issues, the way they distribute their products, they're limited by all those constraints. Any new bank starting from the scratch are not basically burdened by the old age thinking. They can start from they have actually started from the scratch. This is the need, and I want to serve that, right? So in business segment, we have seen a lot of things happening where integrations with, say, business apps like QuickBooks, Zoho, Salesforce, ledger management, invoicing, and then there's embedded finance coming in, cross-border remittance. So a lot of use cases are there. And from a traditional banks, they wanted to serve everything, but actually didn't, focus on, say, one or two or three aspects of actual use cases and improve on that like tremendously. Kind of, serving everything is like serving nothing kind of a scenario. Similarly, you look at the retail segment, again, a lot of things happened from a business model side as well. As Vineet was also talking about, say, getting to the students, then probably spend based, there is a lot of expense accounts which have got created, how people are spending. There is analytics over on top of that, what kind of offers you can bring in, what exactly that need is. Can we customize the whole savings aspect? Can we automate it? And all those things, building customer credit history, targeting young travelers, millennials, roundup services coming in. So these are the different segments, different use cases, and basically there is a targeting which is done by the neobanks to serve those needs. There's a third aspect which also came up, which is enabling the front end neobanks kind of a scenario where there is a layer in between, which actually either serving the banks in terms of, can I make your infrastructure better? Can I offer some credit scoring kind of a scenario, personal finance management, and all those things. So right now what I see is everyone is actually doing a lot of things, or say lot many people are doing actually a lot of things, and finally they will try to consolidate over a period of time. I mean, this has been the case for any sector which was very ripe for the disruption, and I still see a lot of business model innovation as well. And depending on the unique targeting, think about subscription based banking, right? It's still not there, and people are getting used to it. Think about from an employer's perspective, salary is the biggest subscription model running across the world, right? People are actually giving services based on that thing, and they get paid in salary every month. Now, overcrowding aspect, I don't think so. This is how, this is like very initial stage of the evolution of neobank. And overcrowding, we may not look like, it may look like from the outside, but as we start, slicing, dicing the segments, the use cases and all those things, still we are not there. And it's a very big market to talk about, say WhatsApp having an MAU of say 400 million, UPI is like about 200 plus million customers. And then even like whoever the, or say neobanks, if there are say 2, 3, 4, 5 neobanks there, even they having about 30 million accounts, with each solving a very targeted things, like someone is solving for investment account, someone is solving for salary account, then travel account, then probably loan accounts and things like that. I still see a huge scope, and I don't see any overcrowding. Over the time, convergence will happen, consolidation will happen, but that's my thoughts here.
Definitely, I think right, you put it, a lot of models and a lot of interesting models, and probably the investors are also very keen to understand this segment. You can see a good flow of money really coming into this segment, and a lot of points, Swapnil, which you mentioned, definitely echoes with this investor base. Coming on to Sumit, what Swapnil mentioned, you have so many different models. There is significant innovation happening on not only on the servicing side, but even on the product side. But the challenge is revenue. What is your sense around the entire unit economics? Because investors are buying this entire thesis, they are really liking it. But over a longer term, are you seeing unit economics really playing out well, or do you see a bit of consolidation, which even Swapnil hinted, really happening to improve the unit economics?
So I think, let's just start with different VCs have different theses, right? There's no one single thesis out there. So since we're talking about investors, right, like there are multiple different theses going around right now. But if I take a look at what's happening in my 2 cents around it, right, like this, as I sort of touched upon earlier, this banking is, we might say it's been there for like, donkey's years, but like there's still a long way to go. At the rate at which growth's happening in India, there's like at least 30 years of continuous high growth I see in the area of banking. Lot to be done to make users' life a lot more easier, right? Like money is something user doesn't want to worry about, right? Today, according to like a recent study, 8 out of 10 people still don't get their finances. And with that in mind, there's huge potential to grow. So now, as you rightly said, VCs are convinced. Now the question is, what's the unit economics, right? And I think that's where VCs focus on, where if you can have a model which basically ensures that you can do engagement, because what we've seen with digital banks in the past or globally, there's some banks who have been able to get engagement, able to get people starting to use that as their operative or salary account. But for many others, it just becomes, as you create an account, like you download an app, but then don't use it. If you're able to get very, very high engagement and provide added value, where user is almost there in your app every second day, right? And we are seeing some of that with Fi. And if you can build that kind of engagement and add value to the user, then suddenly providing a bunch of services that a user needs in their day-to-day life, from investment to lending to even deposits, right? So from low risk deposits to high risk deposits, you then start providing a portfolio to the user who's already on your platform every second day. And then the unit economics definitely work out. That said, right, to yours and Swapnil's point, is that will there be consolidation? I think there's a market is there for still a number of players. I don't think we've even seen, we'll see more neo-banking players come in the market over the next few years. That's how I would say it. And there is a market big enough for 5, 7, maybe, at least 7, 9 players in that sense. So I think there is huge potential out there. We are seeing users come to the system more than what we expected, with the services, with the hyper personalization, with the innovation, where it's seeing new things. And I think there's a huge potential. That's just my 2 cents on it.
Absolutely. I think though I did ask the question on, is it overcrowded? I think it was just to probably get a comment from you. It is not.
Yeah.
But we are expecting more, not only expecting, but many of the current companies and business models are also transforming and transitioning themselves to a neobank kind of a model, right? And over there, Vineet, if I have to ask you this question, especially you are having a great digital lending tech stack, and many of the banks are moving towards digitalization. Your fintech NBFCs really are doing a lot of digital lending. Where do you see neobanks being positioned or placed around lending? Because they don't have a lending license either as a bank or an NBFC, right? So where do you see that really evolving for neobanks?
Right. If you look at it, see, as I was sharing earlier, before we went live, I think in India, interesting things are happening. The position paper that, Niti Aayog recently, last December published around the existence of digital banks. And, there are RBI, efforts to go towards or maybe issue licenses in some foreseeable future. So, if you look at it, there are two ways, banks make money. I think payments and lending. And that's pretty much the only way neobanks will also make money. I think either payments and payments banks exist, and a true digital neobank would then be, existing in lending and whatnot. What I'm going to say may be, a little disruptive, but we have powered that disruption. People don't know a little bit about us in that sense that Biz2X actually fundamentally came out of our Biz2 credit lending. We were a pioneer in US where, in 2011, we actually established something called a digital lending ecosystem. So there were 2 learnings from what we have done. And we have done this in US with MSMEs at global scale now. And if I convert the lending that's gone through our platform or our technology, it's cumulatively now exceeds $20 billion. That's about 1.5 lakh crore rupees if I convert that. Now that experience has given us 2 learnings, and they are that for neobanks to succeed in lending, you have to operate as a part of an ecosystem. You can't just be an isolated entity that's standing by itself like a bank or traditional bank would, and then be doing some sort of lending, right? So what that basically does is that it has a very strong tech-led rails. I mean, your credit rails and your money movement rails are actually working on the technology. They're automated. They are, as one of the panelists also, I think Sumit shared earlier, that it's 24/7 available. It never shuts down. There is no nightly operations for reconciliation. Lending can happen as and when the need arises, and so on and so forth. So really, I think for neobanks to exist in the lending, they'll have to cooperate and supplement the banking system as of today, leverage what is available from a regulatory and compliance perspective, and
I think when this video has got stuck, we'll just wait for a few seconds if you can join back, or else probably I'll move on. So I think,
user experience.
sorry, Vineet, we actually missed your last 30 seconds.
Oh, I'm so sorry. Is this okay now?
Yeah.
Okay, so I lost the flow there, but I don't know, but I'll repeat whatever I said over the last 30 seconds. So saying ecosystem is going to be how neobanks will have to emerge, and they'll have to collaborate and supplement the regulatorily established banking system today. They'll have to add on to it through the credit rails, and through the technology, AI, ML driven, they can reduce the credit data gap. There's a lot of data available, but you don't understand how to use them for credit assessments. Alternative data, models are emerging. Neobanks can differentiate in that. We are differentiating in that. We have built our own models that help us understand different types of data sets, right? We can take credit decisions based on payroll. We can take credit decisions based on how much you're purchasing. There are alternate forms of lending where you can take decisions based on your point of sale system. So having credit decisions built on some things like this is going to be critical. And I think the opportunities to collaborate, develop the ecosystem. MSMEs in India are still underserved. So you can take an ecosystem tech platform driven approach to enable that. We have also launched something in India called Madhyam that's bringing together the lenders and industry aggregators onto a simple platform, give them the open rails to kind of interoperate with each other. And instead of having a tech strategy where everybody is trying to build a pipe with everybody else, there's a common tech pipe that enable this to, you can plug it into it on demand and you can go with that. So I think lending is real, and stage one is happening. The focus will have to be on MSME. There's a huge growth opportunity, a lot of use cases there. And the next stage will be neobanks will only make money by lending. So they have to perfect these new use cases, newer forms of products that they can very quickly take to market by either hyper personalization. A segment of one will be utopian and the best. You can understand the need of an MSE. But even if we start with a segment of 100,000 and bring a product for that segment, that will be awesome. And that's what we're doing.
That's an interesting thought and a very interesting comment that neobanks will make money primarily through lending. And taking that thought and cue, and if I move to Amol, most of the banks are going down the route of digitalization. I know their tech stack is it's built over a number of years. So to really bring in that flexibility and agileness, like what a neobank brings in, will take some time. But most of them are moving towards digitalization across their product segments. Looking at neobank, which is trying to really right now leverage on that void, or bringing that entire new experience to that customer. Let's say banks are also started thinking on those lines. Today, they are partnering with neobanks, right? But do you see that as a challenge over a mid to long term period for neobanks?
So look, traditionally what has happened is, these traditional banks have not been able to match the speed at which the digital disruption has happened. And there's a vast market of opportunities for these neobanks. And what we are actually expecting is, the basic things like opening a digital banking account, getting an automated loan generating, getting the loan disbursal process automated. Then you have those chat-based customer supports. These all things are still not there. These are the basic things what we are talking about. And if at all they are there, they still need to be fixed. So there's a lot that these banks needs to do. And what we are trying to, of course, the banks are pushing towards digital, but what we are expecting from these banks is basically to to sort of digitize everything in the next 5 years, where they haven't been able to do it in the last 50 years to say so. So that is a huge task, and I'm sure the banks are also, I mean, sort of pushing it to moving digital. And neobanks today are sort of acting, I mean, the focus has been towards customer experience. So like the other panelists have mentioned, the key has been customer experience. What neobanks are today doing is basically creating digital journeys for different products and acting as a layer for these traditional banks. And that is there to stay over the next couple of years. I mean, to expect these banks to sort of digitize pretty soon what we are expecting them, it's going to take some time. And in future, when we have regulatory licenses in place for neobanks, we can actually, I mean, we are expecting neobanks to sort of reduce the go-to-market timelines and bring in more innovation and digitize products which are still sort of working in a traditional way. So to summarize, probably what we can say is to stay relevant for these banks, it would be better to, I mean, that traditional banks would sort of, along with neobanks, collaborate, and then traditional banks would act as custodians and leave the innovation to the neobanks, so that they could cater to the dynamically changing landscape, the financial landscape of this country. So those are my views.
That's an interesting thought, and the line which I'll carry from your conversation
Yeah.
is the regulatory license line.
Yeah.
Right. And moving on to Prashant, neobanks, and I think that question has been answered to a large extent by most of you all, especially Amol just said it, that neobanks are prime for banks, right? Their model is prime to become a bank. But a question, and the question I'd asked earlier was, will the traditional banks becoming digital will cause a problem for neobanks? But now it's the other way around we are talking. Neobanks hopefully should get a digital bank license. In the past, RBI came up with a differentiated category, right? They came up with payments bank, they came up with small finance bank. They've carried the category of small finance bank. Payments bank, as of now, it's no new licenses are being issued, right? And most of the payment banks may be thinking of converting into a small finance bank. So lending, as Vineet said, becomes crucial. Looking at neobank, let's say a differentiated category comes, right? Will that remain a differentiated category? Now we are assuming that probably we should get the license. I think all of us will push for the license on this panel. Will it remain a differentiated category, or over a period of time, they would also like to become like any other universal bank?
Interesting. Thanks, Sanjay. Well, if you ask me, of course, in this panel, digital banking is definitely the need of the hour. I mean, that's a given. But jokes apart, but we need to look at some of the journeys. I mean, if I look back, how India has become the global leader in digital payments. I mean, it's due to seriously RBI having the foresight to do open payments. I mean, without that framework, there is no way India would be where it is right now in the global scheme of things. In all the industries, by the way, wherever we have opened up, it has increased the size of the market. Whether you look at mobile number portability in telecom, whether we look at unified KYC, it has led to a lot of bank accounts being opened. If you look at UN for Provident Fund, all of these things have been very, very pro-customer, pro-consumer, and have increased the size of the market. Now, imagine the value India can unlock when we not just do digital banking, but when we do truly open banking. When it is seamlessly across organizations, we can bank. Now, neobanks are still evolving, but maturing fast. I think the need of the hour is to co-create, both for RBI as well as the incumbent banks like HDFC, ICICI, Axis, all the biggies. As you rightly commented, RBI has over the ages experimented with various forms of banking licenses. There is the commercial banking license or the universal banking license, small finance, cooperative payments, and a host of others. And arguably, some of them have been more successful than the others. I think the right journey in my mind is to how do we balance building customer trust, regulatory framework and compliance, all the while advancing the state of the art. And in this particular case, regulatory compliance is a must to build trust And by the way, this is no different than what other private banks or the traditional banks have done. And also, if I draw parallels with how innovation happens in industries and domains, it is almost always with industry partnerships. I mean, if you see the innovation models of many of the big companies, the MNCs like Cisco, Microsoft, Google, they work with startups, and eventually once a model succeeds, they eventually absorb them. So I think in our case, for instance, both us, as in Jupiter, and Federal Bank, our backend banking partner, have benefited immensely from this partnership and learning from each other. And our customers have reaped the benefit of best of both worlds. So my gut sense is it will take another 12 to 18 months of experimentation and learning. And by the time the industry matures, a digital banking license would be a reality. That is the amount of time it will probably take. And RBI's move to institute a separate body will not only simplify regulation, but also fuel innovation. I think all of us have heard that there is a new fintech department being created at RBI. So I think my gut sense is RBI at some level is very, very progressive. If I compare all the central banks across the world, I mean, they are really balancing. They are extremely pro-customer and consumer while balancing, hey, how do we partner with the industry stalwarts as well as fintech companies, new age fintech companies to advance this ecosystem. So that's my take on the license part of it, Sanjay.
I agree with you. Our regulator is quite progressive, especially with the last budget announcement around the digital currency. But I'm not going to ask any question around digital rupee today. I think let it evolve further. But one question, which is a bit of crystal ball gazing, as a final comments from each one of y'all, and I'll again move on to each one of y'all, is where do you see Neobanks 5 years down the line? Very short, sweet answers, probably one-line answers also, I'm okay. Sumit.
Changed ways people's lives by making finances easy to understand and basically help them in their journey of being financially independent.
Fantastic. Amol?
Yeah, so I think accessibility, cost-effective banking, financial capabilities, products under one umbrella, and personalization is something that neobanks would offer in the future.
Great. Swapnil?
I think 5 years down the line, regulations would have been updated, which are currently like physical brand centered to now virtual economy, digital part of it and all. That's absolutely I can foresee. And as Prashant touched upon, niche banking license is just pending there. So it can be digital front end, whichever form it comes out. 5 years down the line, multiple neobanking will be thriving on those parts and will be really big and giving, solving for the customer problems there in a big way.
So assuming 5 years down there is regulatory support for neobanks, I would take a bigger perspective to it, and my bet would be there would be at least 4 or 5 big neobanks who would have made India Atmanirbhar by supporting the SMEs and taking their contribution to GDP upwards of or close to 50%.
Okay, I mean, this might sound slightly visionary, but or maybe not. But what I would like to see 5 years from now is how India taught everybody how digital payment should be done. I think 5 years from now, all of us and India should teach the world how open banking should be done.
Fantastic. And if I just want to add a couple of points to that 5 years down the line, probably maybe not 5 years, but maybe sooner, we'll have such meetings in Metaverse. But for neobanks, probably they will take the lead of how to do banking in Metaverse using the digital rupee, probably. So on that note, would like to thank each one of you. I think it has been a great conversation, a great panel. I really appreciate you all taking this time out and for E3 as well as for Times of India Group to really allowing us this platform to have this superb conversation. Thank you, everyone.
Yeah, thanks, everyone. Honored to be here.
Thank you. Great to be on the panel.
Thank you very much, Sanjay. And thank you indeed to all of our panelists panelists. I think this is one panel that really got me hooked right from the start until the end with the kind of moderation, Sanjay, that you did, the right kind of questions and the kind of answers that we managed to gather from our panelists. Also, the way you all summed up, I think that is something we are eagerly looking forward to, all the trends that you've shared. So once again, thank you, gentlemen, for joining us this evening. Thank you once again.
Thank you.
Thank you.
Well, ladies and gentlemen, dear attendees, well, it looks like we managed to end on a buoyant note this particular panel discussion. So let's move forward towards our next keynote coming your way. And before we get to hear from our next speaker, we're going to also take a couple of seconds over here to bring on board our next keynote on the future of customer engagement in banking. So before we get to hear from our speaker, I hope all of you, all our attendees are also engaging with your fellow peer members in the virtual platform, a beautiful one that we've created for all of you. So take some time off to also network, but stay with us for a couple of seconds. We'll get the keynote session started in just a few seconds.